Alright everybody, I just wanted to add one more piece of commentary as at the close on Wednesday. This is in regards to Deutsche Bank. Now, Deutsche Bank today closed at a new all-time low. You can see in the top right-hand corner of my screen, $10.38 per share. If I zoom out and show you this chart, it is nothing short of just ugly. I mean, if I go out to the monthly chart, you can see if I go to a closing line price, this is the peak in 2007. We were up at just over $140 per share on the closing price of Deutsche Bank. Here we are today, as at the current juncture at $10.38. This stock, as a representation of the financials, largely in Europe, being the largest European bank, is just downright ugly. Well, I like to believe that where there is smoke, there is fire, and obviously something is happening over at Deutsche Bank, which really is just a representation of the current stock price of this particular financial institution. Now, what makes this very important is because we've seen this before with Lehman Brothers. If you actually overlap the chart of Deutsche Bank with Lehman, it's very hard to do there. You can actually Google this and find overlap charts of where we currently are priced at and some of the similarities between the stock price movements of Deutsche Bank and Lehman. It really doesn't suggest all that much of a rosy picture moving forward. This has been under significant stress for quite some time. I remember paying very close attention to this during the slight crisis that we saw towards the back end of 2016. It did recover. It moved from roughly $11 per share. This is US dollars, up to $20. And most recently, at the beginning of 2018, this is in the month of January, we came back on up for I don't know what or how many consecutive retests of this resistance areas we actually achieved, but I think it was in the vicinity of 4. If I actually drag in a lower resistance area down here at about $19 per share, you can see that all of these touches here are very clear resistance. Since this and since the establishment of this double top, you can see the bottom just continuing to fall out of Deutsche Bank. And again, as at the close on Wednesday, a new all-time low for Deutsche Bank. Now, why is this important? The reason for this is because I started to pick up on this a couple of weeks ago. This is XLF, the US financial sector, and it was after this gap over here where the picture really began to become concerning. Now, this was a gap to the downside. We were retesting roughly this 27 handle, and we were saying, look, we have to remain neutral. There could be another swing back up to the top of this declining resistance area, but once we get into the apex, we must remain neutral and then just wait for, of course, the traders or at least active market participants to direct us as to which direction the US financial sector wants to move. Now, as you can see, fast forward roughly 1 month between this candlestick just here and where we find ourselves closing as at Wednesday, it looks as though we have definitively broken below $27 on the financial ETF, or at least the sector, and it's looking as though this is under significant pressure. The next actual support area on XLF is going to be all the way down here at 25.50, and then who knows, we could move down to 25, and that will be on the first push if this is going to be a true break of the current levels. Now, what also makes this interesting is that if we zoom on out and show you some of these trend lines, we have very much so broken this support area. Now, as you can see in emerging markets and some of those markets, also currencies, not to mention GLD, some of these long-term trend lines are at least decelerating and also accelerating fan lines that are just continuing to be broken with no real support showing up. It looks as though that if we do see this definitive movement close in a continuation below this current handle, there is a chance that the XLF come all the way down to really $22.50 or potentially as low as $20. Now, $20 is the fan line, or at least the first trend line, I should say, since the 2009 bottom, okay, the early period in 2009, which has essentially put us in this bull market and this most recent economic cycle, business expansion, through to where we currently find ourselves. But it is looking very shaky at the moment. I just wanted to point this out, and it is in some case another representation of the financial system. Really, when you see XLF under pressure, if I can bring up these long-term simple moving averages, it's no surprise that we are breaking below the 200 simple moving average. Yes, we don't have a cross yet, but I assume that this is going to take place probably in the month of July. And really what this means is that, again, financials are under weakness. It's interesting. I've had a lot of people email in for a number of weeks now suggesting stocks not only on the US markets, or at least financial companies. Recently, we removed Goldman Sachs, for instance. This was I think maybe a month ago now, potentially a little bit longer, just because it really wasn't acting all that disciplined. And again, this comes back into just what's happening with XLF, and largely, again, a larger symptom of currently the pressure and the stress that Deutsche Bank is under. This is not just an isolated sort of occurrence. This is happening broadly, really, around the world too. A lot of financial companies under significant pressure. So keep an eye on this. It is something worthwhile, and it is something that is happening really at the current juncture. Again, just to bring up the chart of Deutsche Bank, if I can remove that dollar signal just there, or the symbol right here, this picture is just flat out ugly. I mean, you cannot really take really any positives away from this chart, technically speaking. And obviously something's happening. I don't know what it is fundamentally. I don't really need to know. But again, if you can overlap, just Google Deutsche Bank Lehman, you'll find it. You'll be directed to some visual representations of what I'm talking about. I actually cannot bring up Lehman Brothers, obviously, through my navigator software on my screen. But this sort of puts us at a September potential sort of future date, which is very interesting, September. We'll see what happens. We'll keep an eye on it. But again, even on the gap to the downside and the continuation down 40 cents, this was on elevated volume. And this is after a hammer candlestick towards the end of May, which was on elevated volume with a long lower wick, suggesting, hey, potentially this could be the floor. Well, it looks as though the floor has just been taken out, as it has done over and over again. 2018, if I just bring up a yearly chart, this is a yearly chart, by the way. I mean, just look at all these dark yearly candlesticks here. Just ugly. We're still down another $8.45 really since that $20 resistance peak, more so. So you need to be aware of this. It doesn't necessarily immediately sort of impact any of our market analysis, the market analysis that I performed a couple of moments ago. But you should be wary of this, or at least you should be aware of this and cognizant of some of these movements taking place outside of the US markets as well, because it's just simply not looking good out there. All right. On that note, I'll say farewell. Again, if you have any questions, email through success@pivotpoint-trading.com. Otherwise, I'll probably see you guys at the close on Friday, if not certainly on Saturday in that pro analysis class. All the best, everyone. Goodbye.